So a big question in the crypto market right now that a lot of people in crypto, in DeFi are talking about is why Ethereum is underperforming, right? Why Ethereum is underperforming. For those of you guys who have been in the crypto space for a while, you guys know that Ethereum is underperforming this cycle compared to previous cycles, right? As a result of this, it's caused the other coins outside of Ethereum, maybe the lower cap coins that some of you guys have, and the entire crypto space besides Bitcoin and a few others to underperform, right? And they have not performed yet to the level that people were expecting, and also probably where the prices should be, okay? Now, today in this video, I'm going to break down why Ethereum has underperformed, why it matters, and why Ethereum being higher up in price is so important, and then why I think this trend will likely reverse at some point this year. Okay, we're going to break that down today, but before I do, I need to let you guys know that nothing in this video is financial advice. I'm not your financial advisor. I'm not your financial counselor. What you decide to do with your money is up to you, and you need to take responsibility for your buys and your sells, okay? Now, this might be a little bit of a longer video, but if you guys want to learn and you guys want to understand the crypto market heading into the bull market of 2025, stay with me and we're gonna break this down, okay? So I think the first thing that we need to talk about is what is the ETH coin, right? What is Ethereum? What is the ETH coin? And why is it important for the entire crypto space, okay? So for those of you guys who don't know, Ethereum is essentially a smart contract platform for people think that Ethereum and Bitcoin are competing. They're not, all right? Maybe for liquidity they are, but overall for the product market fit and the use case, they're two different products, two different assets entirely, okay? Now, what the ETH coin is it's the coin, the gas coin that's used on the Ethereum network, okay? The Ethereum network. Now, what is the Ethereum network? The Ethereum network is the blockchain rails that people can create smart contracts, decentralized applications and platforms. And in order to move money, in order to send, in order to swap, in order to do, and in order to interact with these smart contracts, okay, you need the ETH coin in order to pay for what's called gas fees, okay? Gas fees are the fee that you have to pay in order to operate on the blockchain, all right? So that's what the ETH coin is. A lot of people refer to Ethereum as digital oil, okay? The ETH coin is essentially the oil or the gas that you need in order to move on the blockchain, similar to the way that a car needs gas in order to get from point A to point B. Ethereum works the same way on the Ethereum network, okay? That's what the ETH coin is, and that's the purpose of the coin, okay? So let's talk about the importance of Ethereum for the entire crypto market, okay? A lot of people don't realize this, but Ethereum essentially, a lot of the innovation, a lot of the smart contracts, a lot of the decentralized exchanges, a lot of decentralized lending, a lot of the liquidity that is used for that big money has is parked on Ethereum, okay? It's either in ETH or it's in the applications on the Ethereum network, such as Uniswap, Aave, Chainlink, etc. Okay, so that's one thing about the thing is that it essentially was the first network that successfully created smart contracts, and right now Ethereum has the most total value locked and the most network effect in all of crypto. I know Solana's catching up; it's making a lot of waves, getting a lot of attention, but Ethereum is still by far the king in terms of TVL and in terms of network effect, okay? Wall Street institutions are most interested in Ethereum for this use case, for smart contract networks or for smart contract based networks, okay? Now, the other thing that we need to talk about here is that a lot of other blockchains such as Avalanche, Binance, a lot of these other chains are EVM compatible. And what this essentially means is that they are using what's called the Ethereum virtual machine, and they essentially interact with Ethereum in a certain way, all right, to keep it simple, all right? And when you use a wallet such as MetaMask as an example, all right, then you can interact with all the other blockchains with Ethereum, and you can still hold the keys through the EVM. Okay, so a lot of these other blockchains are connected with Ethereum, and they use the EVM, Ethereum Virtual Machine, to interact with Ethereum because liquidity's there and etc. Okay, so that's the other thing that we need to keep in mind. All right. Now, why Ethereum has underperformed, right? Why Ethereum has underperformed so far, all right? As a caveat, I own Ethereum, okay? And probably a lot of people watching this video also own Ethereum, or at least aware of Ethereum. So a lot of people are wondering why Ethereum has underperformed, right? There's people that all over social media, all over crypto Twitter, that are talking about how bearish Ethereum is right now, how it doesn't have the narrative, how it's bearish, how it's dead, how it's not coming back, which I believe that they're wrong about that. But for the time being, Ethereum has underperformed versus BTC. Okay, Ethereum has underperformed versus BTC in this bull market, which last bull market that was not the case. Ethereum outperformed Bitcoin by a lot by the time the bull market was over. And the parity of ETH is, although it's still on an uptrend, it's this bull market, this cycle, it's been slowly going down, at least as of right now. Okay. And so Ethereum has underperformed in price. It's sitting around, I believe right now, $1,800. All right. The low of Ethereum in the bottom of the bear market was roughly $700, $800. So it hasn't really, it has underperformed versus Bitcoin. And then as a result of this, and we're going to get into this a little bit later, but a lot of these altcoins are paired with Ethereum, so they haven't performed very well either. Okay. Now, there are exceptions to this, right? There are exceptions. The AI narrative did very, very well. The meme coins did very, very well, although those are mostly on Solana. All right. So it's not like there wasn't any meme coins or any altcoins that did very, very well. But a lot of the coins have not gotten the type of gains that in previous bull markets altcoins have gotten, at least not yet. And I'm going to break down why that is. But Ethereum is underperformed. All right. So why is Ethereum underperformed, right? There are a bunch of reasons why. A lot of people are wondering why, they're confused, and I'm going to break down why it's underperformed, okay? The first one is regulatory scrutiny, all right? Regulatory scrutiny. So for those of you guys who don't know, the Security and Exchange Commission and the U.S. government, mostly under Biden and under the Democrats, were really cracking down on the entire crypto space, and they used what's called regulation through enforcement, which is basically where they just filed a bunch of lawsuits, even if they were unwarranted. And Ethereum is included in this, and a lot of other applications on Ethereum, calling them unregistered securities, unregistered brokers, etc. All right. Now, what this did, okay, first of all, it got a lot of people who were invested scared. Okay. That's number one. But number two is that it also kind of stalled the innovation of a lot of applications and a lot of stuff going on in DeFi for a period of time, because they knew that the regulators were coming after them, and they didn't want to make upgrades such as revenue distributions for their token holders that would cause them to get in more regulatory scrutiny. Okay, so that's number one, is that it paused innovation because people didn't want to get in trouble with the law. Okay, using Uniswap as an example, Uniswap was waiting to bring revenue to their token holders, but because of the SEC case and the SEC lawsuits that were coming after them, they had to kind of lag that and pause it for the time being, because they didn't want to get in trouble with US law. Okay, so that's number one, is the regulatory scrutiny. They didn't want to innovate, and it paused innovation. And then on top of that, it got a lot of people in the crypto market scared because they didn't know what was going to happen. Now with the Trump administration being in office, the Uniswap case got dropped, so they're already moving towards innovation, but it did lag innovation for a period of time. Okay, the Trump administration is a lot more open to blockchain innovation. They want to incentivize blockchain companies or foundations to move to the United States now, giving tax incentives and stuff like that. Okay, so that's number one. All right. So now that that's changed, I think that we're going to see a lot of upgrades, a lot more revenue distributions and things like this in on applications on the blockchain. Okay, that's number one. Number two is the gas fees. All right, everybody knows about the gas fees on Ethereum, at least the main net. All right, we're going to get into the layer twos next, but the gas fees. All right, the gas fees on Ethereum mainnet, for those of you guys who move on the blockchain, when Ethereum is very busy and there's a lot of volume and there's a lot of stuff going on, there's a lot of money moving around on Ethereum, it's 15, 20 bucks a swap. All right, it's 15, 20 bucks a swap. Most average people don't want to pay that. People, if you're trading meme coins on the Ethereum network, if you're trading 50 to 100 bucks and then in order to buy and sell, it's 30, 50, nobody wants to do that, right? So they were looking for cheaper, faster solutions than Ethereum, okay? And that's one reason why Solana has done so well, okay? So that's number two is the gas fees. All right, if you're taking a lot of profit on a coin, let's say you're taking $100,000 in profit, you're paying a multiple $1,000 gas fee just to move your money. All right, and nobody wants to do that, right? Nobody wants to do that. Ethereum essentially made a decision that they were going to scale this cycle through layer twos. All right, they wanted to scale through layer twos, which for those of you guys who don't know what layer twos are, so you have Ethereum mainnet. All right, and then you have the second layer imagine it's a skyscraper, right? The Ethereum mainnet is the base foundation, and then the layer twos are the second floor, and there's a bunch of different rooms on the second floor, and that would be the layer two blockchains on Ethereum. Now there's tons of layer twos, all right, but essentially the mainnet is unusable, okay? It's unusable for average retail people, which is why Solana and a few other blockchains have gotten a better narrative, because that's what consumers want, especially people who are trading, right? They want cheaper, faster solutions to sending, receiving, swapping, all that stuff, right? So that's the other thing is the layer two. Nobody wants to pay 20 bucks for a swap, 30 bucks for a swap, hundreds of dollars for a swap if it's a lot more money, all right? Nobody wants to do that. So that's another reason, all right? The third reason, which was the solution for the Ethereum network to scale, is the layer twos, okay? Now, I don't want to get too technical on this video, but essentially what the layer twos are is they run off of a single sequencer, which basically makes it a little bit more centralized, but basically what they do is they simplify the data, and then they send it back on the blockchain, making the transactions lighter with less data, making it faster and cheaper for people to move around. But you have to bridge your money into the layer twos in order to do that if you want to benefit from Ethereum security, and you need to move on the layer twos, okay? Now, some of these layer twos are Arbitrum, Optimism, Base blockchain. There's hundreds of layer twos out there, which is a huge problem, again, in terms of fragmented liquidity. Okay, now what does fragmented liquidity mean? Fragmented liquidity means that instead of having one price chart and having all the money on one chain, all the money is spread across all these layer twos, because nobody wants to pay for the Ethereum mainnet gas fee. And so since all of the money in Ethereum is spread across all these different blockchains, they're all on different trading pairs, which means it's harder to pump the price of Ethereum, okay? Now, this also creates a paradox of choice where people don't know what blockchain to choose. It's a little bit confusing moving on all the different layer twos. And so a lot of the time they don't make a decision, and they think it's just easier to just move money on Solana. All right, they think it's easier to move money on Solana, so they just go to Solana and they trade that way because it's easier to understand and it's less steps. Okay, now Coinbase has made it easy for people to go straight from Coinbase to Base, but regardless, all right, it has created a lot of confusion and a lot of fragmented liquidity, which makes it harder to pump the price. Okay, now for those of you who've been in crypto for a few years, the standard play for the layer twos, because a lot of these layer twos have come out over the past couple of years with the Ethereum upgrades, okay? And basically what the play has been for people who have been in crypto is to airdrop farm the layer twos. All right. And then once you get the airdrop tokens, you essentially park your money into yield farms, and then you basically print the layer 2 token, and then you dump it for cash. All right, that's kind of been the play for a lot of DeFi ninjas out there who've been in the crypto space for a while. Okay, but with that being said, the layer 2s work very well. Okay, the layer 2s work very, very well, which is, in terms of the Ethereum price, has been a problem. Okay, now for those of you guys who don't know, the way the layer 2s work is basically, or the way that Ethereum works, not the layer 2s, is that the more Ethereum gets used, similar to oil, when you use oil, it burns, or you use it, and the supply gets destroyed. Ethereum works similar. The ETH coin works similar. When you send, or when you swap, whenever you make a transaction on the Ethereum network, a portion of that Ethereum gets burned. Okay, and then that's what the narrative for this ideally is, that if Ethereum is used more, it becomes deflationary, right? Similar to if oil is used a lot, it gets burned and it's not produced enough, which makes it a deflationary asset, which makes the price of each Ethereum coin more valuable. Okay, so the thing is that the layer 2s, because they're so effective, and the way that the layer 2s work is that the layer 2s, what happened was that because they work so well, it resulted in less ETH getting burned, and then that causes it to be more inflationary, which was a big narrative of ETH, is that it was deflationary. Okay, and since the layer 2s have worked so well, and a lot of people are moving money on the layer 2s instead of the layer 1, and people aren't paying as many gas fees, this has caused the ETH coin to be a little bit more inflationary than usual. Okay, not deflationary. Okay, now, will this change with more activity? Yes, right? But the point is that the narrative and people believing that ETH was deflationary, or it was going to be deflationary, and the fact that it's not because of all the layer 2 movement, okay, this is what caused ETH to be inflationary, which isn't actually that big of a deal, because ETH inflation is still less than Bitcoin's, even right now, all right? But with that being said, it still was a narrative, and because people believed that it was deflationary, a lot of people are bearish on Ethereum right now because of that. Okay, so that's the other reason. Okay, the last reason why Ethereum's underperformed is from the timing of the ETF. Okay, so for those of you guys who don't know, last year, around this time, the Ethereum ETF was approved. All right, and this basically allowed BlackRock, a lot of asset managers, to be able to trade and buy Ethereum. Okay, just like Bitcoin. So there's two spot ETFs that are tradable right now for Wall Street and institutions and asset managers. That's Bitcoin and Ethereum. Okay, there's only two. There's going to be more this year probably. There's Solana, there's XRP, there's a bunch, but as of right now, it's Bitcoin and Ethereum. Okay, and unfortunately, the timing of the Ethereum ETF was at a period of time where we were going through a correction in the entire crypto market. So we haven't gotten yet, I should say, the amount of inflows that Bitcoin saw during their ETF with BlackRock. The Bitcoin ETF was the most successful ETF that BlackRock's ever had. Okay, there was a lot of demand for Bitcoin at that time, and people were buying massive amounts of Bitcoin through their financial advisors and asset managers, and that's what caused Bitcoin's price to go from 25,000 to 80,000 with basically no chill. And then we got a little bit of a correction, and then Trump got in office, and then it went to 110. Okay, so that's the other thing, is the timing of the Ethereum ETF was during a period of time where we were going into a correction in the market. So we haven't seen Wall Street's demand hit Ethereum yet. Okay, now Ethereum did hit $4,000 after the ETH ETF approval, but since then it's been a choppy to sideways market for Ethereum, and there hasn't been Wall Street demand to the same degree that Bitcoin has. Not even close. Okay, at least not yet. But we're going to get into why I think that's going to change. Okay, so that's the last thing, is the timing of the Ethereum ETF, and we haven't seen the potential of Wall Street buying Ethereum yet, which has affected the price, the sentiment, and the overall emotions of the market, how they view Ethereum. Okay, so I guess the reason why, so why am I making this video, right? Why am I making this video? All right, why is this important for crypto? Right? Why is this important for crypto? why Ethereum underperforming is not good for crypto, okay, in general. For those of you guys who are Ethereum bears and you guys are pro altcoins, you guys are pro other stuff besides Ethereum, I'm going to explain to you guys why that's a mistake and why you should want Ethereum to do well in price, even if you don't own any, okay? Because believe it or not, the price of Ethereum has an effect on your bags, similar to the way that the price of Bitcoin has an effect on the entire crypto market, okay? Especially altcoins, especially things that are paired to Ethereum, okay? So the first thing is that Ethereum gives confidence in the altcoins, all right? Ethereum gives confidence to all the altcoins. So once people see Ethereum starting to pump, all right, it gives confidence in the altcoins of crypto, because people believe that we're going to have an altcoin season if Ethereum pumps for a variety of reasons. So a lot of altcoins, a lot of lower cap projects that are building, it gives confidence for people to buy those things and try to swing trade from safer blue chip assets like Bitcoin and Ethereum to alts. All right. So that's number one. Okay. It gives confidence in altcoins, and it's the beginning of an altcoin season when you start to see Ethereum performing. Okay. The second thing is that most altcoins, guys, a lot of people don't realize this, but a lot of altcoins are paired with ETH. Okay. Which means that their liquidity, okay, their trading pairs are paired with ETH. All right. So the way that liquidity pools work is that you have two assets paired 1-to-1, right? You have two assets paired 1-to-1. And if one pumps, then it automatically dumps into the other because they need to be traded 50-50 with each other. And there needs to be liquidity on both sides for people to buy and to sell. So if people are using, if the liquidity pool is a constant product market maker, that means that, which is what most liquidity pools are, 50-50 pools. All right. When Ethereum pumps up in price, what it does in the liquidity pool is it automatically sells the ETH, it dumps the Ethereum, and it buys the altcoin that it's paired with. Okay. And a lot of these altcoins are paired with Ethereum. Now we can get more into detail about how liquidity pools work and how that really affects the prices of things. And a lot of people on the internet don't talk about that and the effects of it. Okay. But a lot of altcoins, especially EVM chains and a lot of Ethereum based tokens, are paired with Ethereum. So a lot of these coins, if Ethereum pumps, let's say Ethereum doubles, the altcoins, just because the altcoins are liquidity paired with Ethereum, it gets about 50% of that pump because those coins don't need as much capital to pump in price. So that's why when you see Ethereum pumping, you see altcoins following that. About a week or two later, you see altcoins start to rally hard with Ethereum because their liquidity is paired 1-to-1. All right. So that's the other reason. Okay. The third reason is that a lot of these projects have Ethereum in their treasury, right? A lot of these coins are holding ETH in their treasury. And when ETH pumps in price, what they can do, let's say as an example, again, if Ethereum doubles in price, they can take those profits and then they can buy their own tokens. Okay. And then on top of that, they can use ETH as collateral because of where they purchased. And then they could use that to borrow money and then buy their tokens or buy their friends' tokens or whatever it is. All right. So that's the other thing, is that a lot of these projects have ETH in their treasury. A lot of these guys have a lot of ETH and they're waiting for ETH to pump in order to make moves. So once Ethereum pumps, a lot of these coins will probably follow and do well. And then on top of that, it's just people who bought Ethereum cheap and then they take profits and then they just pick their altcoins because they're essentially gambling, right? They're trying to make profit on profit. So if you bought ETH at $1,000 as an example, or 800, 900, 1100, a lot of people want to wait till Ethereum gets to 5, 6, 7 grand as an example in order to sell and take profits and then roll that into the altcoins. All right. That's how the money works. That's how the money moves in crypto. Okay. I'm simplifying obviously, but I hope you guys understand what I'm saying. Okay. So like I said, people take profits on ETH and gamble. A lot of liquidity on these altcoins are paired. The trading pairs are paired 1-to-1 with Ethereum. If ETH pumps, these altcoins automatically pump with it. All right. And then on top of that, a lot of these projects have ETH in their treasury. And once ETH becomes more profitable and once ETH's values goes up, these projects and these teams and these foundations can do a lot more with their capital. Okay. In terms of their own projects innovation. Okay. So that's why Ethereum pumping is important. All right. That's why Ethereum underperforming is important for all of the altcoins, the entire crypto space. So if you guys are bearish on Ethereum and you guys don't want Ethereum to succeed, I highly recommend you guys rethink that, because believe it or not, the Ethereum price has an effect on the price of the things that you buy, even if you don't have Ethereum. Okay, so that's why this is important. Okay, so why will this likely change, right? Why will this likely change? Okay, a lot of people don't think that this will change. A lot of people are super bearish on Ethereum for this bull market, and maybe they're right. Maybe they're right, but I have a few things that I think you guys can I think you guys should think about, and why I believe that there will be a reversal this year in the Ethereum price. Okay, you guys, I think a lot of people need to follow the smart money, right? You guys need to follow the smart money more, and you guys need to see what the smart money is doing. People who have insider information, people with a lot of money, people who are positioning themselves in order to make a lot of profit this year in the crypto space, right? You guys got to ask yourself, what's the smart money doing? What's the smart money sentiment? What are their actions, more importantly? And then what are what's the dumb money doing, and what are their actions? Okay. So a lot of people don't realize all the work that's been done in the background for Ethereum with institutions and with Wall Street. Okay, first of all, the ETF, right? There might be another ETF coming up in the future. Okay, but the ETFs have shown that Wall Street is comfortable with Bitcoin and Ethereum to be traded. Okay, so when there is demand for the crypto market in general, it's very, very likely that Wall Street and asset managers, the only two that they can legally buy right now is Bitcoin and Ethereum. And there's a reason for that, right? All that money that's locked up in, on Wall Street basically can buy Bitcoin and Ethereum as of right now. And I think that BlackRock and a lot of these asset managers are very strategic with the assets that they put there. Okay, and they want to make money on their fees as well. Okay, they want to make money on management fees, and they also want to see the ETH coin pump because they have a lot as well. Okay, the other thing is that BlackRock actually has a tokenized treasury fund on Ethereum, and they chose to build it on Ethereum. For those, if you guys want to do more research into that, it's the Biddle Fund, and it has a lot of liquidity. All right, BlackRock's bridging a lot of liquidity into this tokenized treasury system. Okay, and they decided to build it on Ethereum. Okay, why are they deciding to build it on Ethereum? If they were bearish on Ethereum and they were really they didn't think that Ethereum was going to do well and it wasn't one of choice, they would have chosen another blockchain, but they chose Ethereum, right? Franklin Templeton, same thing. Franklin Templeton built a tokenized treasury fund on Ethereum. All right, they chose Ethereum because it's blue chip, right? It's secure, and they want to. They're setting up for a lot of stablecoin dollars, a lot of Wall Street money to be bridging into Ethereum. Why are they doing that, right? While the Ethereum market is super bearish, why are they building that on Ethereum, right? Behind the scenes, nobody's talking about it, but why are they doing that? Why is the smart money making moves that looks like they're ready to onboard a lot of capital into Ethereum? Okay. Fidelity, same thing. Spot ETF, they're pushing for a dividend ETF, which is basically just Ethereum with the staking yield on it, which Wall Street really likes. Wall Street really likes, they understand dividends, they understand yield, they like dividends and yield. All right, why is Fidelity moving towards this as well? All these big Wall Street Goliath asset managers and investment banks are moving and making moves on Ethereum, hedge funds, right? World Liberty Financial, talk about Donald Trump, right? Donald Trump, for those of you guys who are aware of the Trump coin, right? The Trump coin got dumped. All right, I don't want to get conspiratorial, but what did he buy with that? He bought Ethereum, right? He bought Ethereum with World Liberty Financial bought Ethereum, okay? BlackRock can't stop buying Ethereum over the counter, right? What is this is smart money. This is Wall Street, and they're buying ETH, right? And it looks like, and because they're buying it over the counter, it doesn't affect the price on the margin. So they're buying it over the counter, big bags, right? Why are they doing that, right? Why are they doing that? It looks like they're getting set up to make some profit, okay? Which means that and in order to make profit, Ethereum would have to go up in price, okay? So the other thing is the Ethereum Petra upgrade, all right? We're already 30 minutes in. I'm not going to get too detailed into the Petra upgrade, but basically it's a big upgrade for Ethereum that looks like it's going to be occurring on May 7th, which, you know, based on the timing of the prices and everything, it looks like that'll be the end of the dip that we're seeing right now. Okay. If you guys didn't watch my video yesterday, I said that the crypto market is probably going to see a little bit more of a correction. April 30th to May 7th is probably the best accumulation time. Not financial advice, right? But it looks like there might be a little bit more pain before we get a really bullish and fun summer. All right, a really bullish and fun summer for crypto. Okay, but the Petra upgrade looks like it's in pretty good timing. All right, so you know, everybody's crying, complaining. Petra upgrade comes out. There's more upgrades to Ethereum. All right, layer 2 stuff, usability. ETH staking differences, right, makes it more appetizing to Wall Street. So we could see that be a potential pivot point for Ethereum as well. All right. Now, the other thing that we need to talk about is the interest rates, right? The interest rates, the more broader macro stuff. All right. Lower interest rates equal altcoins outperforming Bitcoin. If you look at the charts, during times of lower interest rates, that's usually when altcoins outperform safer assets and Bitcoin, and then we could see momentum in the altcoins. And I'm not going to get too much into detail as to why Jerome Powell will very, very likely lower interest rates. All right, Trump wants him to lower interest rates. Jerome Powell doesn't want him to lower interest rates. And when debt is cheaper, okay, when debt is cheaper, that means that risk on assets typically go up during periods of lower interest rates and quantitative easing. All right, and in the crypto market, that typically means that that's usually an altcoin season because people are willing to take more risk because borrowing is cheaper. Okay, so like I said, Wall Street is setting up for Ethereum to take off. At least that's what it looks like when you follow the money, when you follow the actions of people. And then when you look at the dumb money, they're selling and they're all scared of Ethereum and stuff. I'm not saying that there hasn't been any sell-offs from institutions of ETH, but for the most part, they're setting up for a massive inflow of capital is what it looks like to me. I mean, why would they be making these moves and positioning themselves and choosing Ethereum? Why are over-the-counter deals happening where these asset managers are buying a massive amount of Ethereum, right? These are questions that this is a good learning lesson where you follow the smart money, you follow their actions, right? And then you look at the dumb money and you look at their actions and what are they doing, right? And it looks like to me, and this is why I believe that this sentiment will eventually pivot. All right, do I think that Ethereum can get to 20,000, 25,000? No, I don't think that that's going to happen. Okay, could it get to 8 to 12? Yeah, it could get to $8,000 to $12,000. If it underperforms, it could get anywhere from 5 to 7. All right, 5 to 8 in that range. Okay, and that's with a very, very severe underperformance of ETH. But 8 to 12 is still my estimate for ETH. All right, not financial advice, but things can change very quickly in crypto, you guys. Right, things can change very, very quickly, and I think for Ethereum, it looks like it could be one that gets there could be a pivot in the overall sentiment of Ethereum, and with that comes a lot of opportunity, okay, for both Ethereum and the altcoins, all right, and for the altcoins that are paired with Ethereum and the entire crypto space, okay. So Ethereum is very important. That's why I wanted to make this video and answer this question for you guys. All right, I hope you guys have a good day. All right, 33-minute video, not too bad. All right, I tried to summarize a lot of information very quickly. I hope you guys understood what I said. And if you guys have any questions on this, you guys can write in the comments and ask me, and then I'll answer you. Okay, guys, hit the notification bell, subscribe, like this video, save this video. All right, hope you guys like my content that I've been posting recently. And I hope this is valuable to you. Okay, Instagram, Chase Your Grace. TikTok, Chase Your Grace, approaching 250 followers on TikTok. Seen a lot of growth on there. YouTube, follow me, subscribe, you know, all that shit. All right, have a good day, you guys, and bless up.